So there definitely is a ton of crazy stuff that happened to Wish stock since going public at the beginning of the year, being down almost 68%. However, since the first 65% gains almost right after the IPO. But at the beginning of last month, we've actually seen another incredible 77% run up to over $14 again, which also is where we are currently pulling back from again. So what we are going to do today is give you an updated insight into what is happening to the stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. So it's very clear that Context Logic, which is essentially the company that owns Wish, is an absolutely insane one. Wish said in its IPO filing that it had over 100 million monthly active users in over 100 countries, reportedly making it the most downloaded worldwide shopping app for each of the last 3 years. In addition, the company distinguishes itself from other e-commerce marketplaces by completely disrupting the traditional shopping experiences and emphasizing individualized visual browsing above standard searches. However, since its initial public offering, or IPO around the beginning of the year, Wish stock hasn't been doing so well. In fact, the stock's price fell 16% below its initial offering on its first day of trade in December, to only then recover a bit as mentioned at the start of the video. So the stock's value only once surpassed its $25 IPO price in January, spurred by the surge in GameStop and other early meme stocks. Furthermore, the company has received a good amount of criticism which validates the price floundering. Many people regard the retailer as a poor replica of Amazon, which is also important to consider for our prediction at the end of the video. Business Insider went so far as to explicitly evaluate the purchasing experiences on both sites, concluding that Wish falls short of Amazon in terms of experience and quality. As a result, many investors actually bet on the company to fail just 6 months after its initial public offering, making over 20% of Wish's float short at the time of the major pullbacks. And exactly for these reasons, it was a perfect short squeeze candidate. As a result, Wish stock has become a Wall Street Bets overnight sensation. The number of times the stock has been mentioned has surged by over 4,000% in just 24 hours, with tons of people making enormous purchases in the stock, while causing a short squeeze and price increases of almost 100%. Simply looking at the trading volume reveals retail traders' massive faith in Wish. The new average volume is approaching 70 million shares, a staggering level when compared to Wish's old daily average of 9.5 million. As previously said, the stock has risen almost 100% since its recent lows and was shortly trading at almost $15 again before the then happened pullbacks. But before we get to the prediction at the end, let's take a quick look at another crucial factor to consider: insider selling. CAO Brett Just, for example, sold 196K worth of shares at a price of around $20 per share in the last 12 months, which was the largest single sale by an insider. And generally speaking, it's not that good of a sign seeing insider selling, and the lower the sale price, the more investors are concerned. But given the tremendous hype generated by retail traders, it shouldn't really matter. Wish's low valuation of 1.7 times this year's sales, as well as revenue growth of 10% to $1.9 billion in 2019 and 34% to $2.5 billion in 2020, support current price increases. Analysts also predict revenue to climb 24% to $3.2 billion, which could explain why the company is attracting so much attention right now, with the next earnings release also being in just a few days. However, the aforesaid short interest is the most important factor that allowed Wish stock to gap up so much. So whether you should buy strongly depends on whether Wall Street Bets and retail investors continue to put the stock into the spotlight and buy it into new highs. However, the situation is currently looking pretty good, as the excitement certainly continues. Alright, with that being it for today's video. However, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.